Welcome. T2D3 is all about growth. An exponential growth journey that requires multiple dimensions of execution of growth levers to be executed in parallel. Why is T2D3 so important? A SaaS business is like a big flywheel of growth that can be unstoppable once it gets traction, but it takes a lot of energy to get going, right? To gain that initial momentum. And the critical period that follows right after you, sort of as a company, you hit product market fit is to get to that T2D3 pace fast. And it comes down to, if you think of a 5-year period, you need to grow 35% compound annual growth rate, like every year. Triple, double, double, double. It was introduced by Neeraj Agrawal in 2015. And the premise is that a SaaS business that can follow this T2D3 revenue growth pattern can go from a couple of million in ARR, which is typically where you are when you reach product market fit and when you get your first round of funding, to go from there to 100 million in ARR in about 5-6 years, right? And earn that $1 billion unicorn valuation. That's really what T2D3 describes. So let me sort of dissect it. So let's say you start with 2 million after reaching product market fit, 2 million ARR. Now you have to triple that to 6 million ARR in that first year. And this is literally still a little bit, a take all you can get effort. The founders will accept every deal, even from customers that are not a great fit. This is kind of what they did and what you did and what your company did to get to product market fit, right? To just build revenue. But you know that this is not the ideal growth path, right? So now in that first year, you really need to invest in focused marketing and sales that understands what the ideal customer profile looks like. And now you need to use that as your first beachhead to build on that with maybe a very specific sales approach and maybe a more filtered marketing approach, more targeted. The second year, you need to triple again. So now you go from 6 million ARR to 18 million ARR, and you reduce customer churn to help sort of to consolidate your revenue base so that your new revenue builds on top of that. That's how you go from basically from 6 to 18. You might starting to get some business from referrals as well in that sort of first tripling of the revenue the second tripling of the revenue in the T2D3 journey. Now you get to the third year. Now you have to double it. So you go from 18 to 36. So what happens in this sort of phase? Your sales team might be expanding the ACV, the average contract value. They're maybe learning how to sell bigger deals. Discounting will become a little more managed. Your marketing team may have found different ways now to drive demand gen from multiple channels. You're probably starting to do some upsell and cross-sell. You may actually have invested in things like customer success or account management to drive that ARPU expansion. In the fourth year, you now really need some other growth drivers to kick in to get you from 36 to 72 million. Here are a couple of examples. You're optimizing maybe funnel and reducing friction, right? Optimizing conversion rates. Not just marketing funnel conversion rates, but the handoff to sales converting those leads into customers. You're up-leveling your team with A-level talent, right? Maybe before you weren't able to afford the top players, the top talent. Now you are. So now to get sort of in that fourth year to double again, upgrading your team is a big part of that. You're now also starting to get attention from analysts or from influencers, right? Who might be saying, hey, you're a market leader or you're a challenger in an existing market. Can you add a channel strategy to complement your go-to-market? You didn't want to do this earlier. Like when you, for example, want to recruit resellers or do business development with partnerships. It's hard to do that when you're not really big enough, when you're not interesting enough, so you can do all this channel development and have a channel program, but if you're too small, they're just not going to prioritize you versus some of the other vendors in the market. But now you are there, at that point where you can probably afford to invest in a channel model. So, should you expand your ICP at this point, right, to maybe go after a larger market? The fifth year, the final year of the T2D3 growth curve. Now you need to double one more time. So from 72 to 144. million in ARR. You need to unlock that sort of potential $1 billion unicorn valuation. Now you really need to consider moving your focus from T2D3 exponential growth to focus on profitable growth. Like after T2D3, the rule of 40 basically says combining your compound annual growth rate and your profitability, you should get 40%. So now it's not just because your growth will slow down. You may not be growing at 40% anymore. Maybe it's 30 or 20%. And the rule of 40 basically says you have to then compensate for that by making that growth profitable. But that's really the last milestone here, right? After year 5, that's where you need to go. So the key to SaaS success is first and foremost to scale fast, to get to product market fit by gaining customers and basically getting every revenue you can get and then using that to find out what's working, what's your ideal customer profile. But after that, you really need to retain those customers and grow recurring revenue from each of those, growing ARPU. And doing all of this at the same, that's really what T2D3 is very difficult. And so let's look at the formula kind of to summarize what you need to do to hit this growth rate. So there are basically 5 different factors that go into this growth formula. The first one is to drive demand generation from multiple sources. So I call this demand generation diversification. That's what the MQL part stands for. So you need to drive demand not only from organic or paid or a sponsorship or account-based marketing. So usually one of those growth levers has gotten you to product market fit. But now that you need to hit T2D3 growth, you need to have multiple demand gen levers that all drive together, drive up that MQL number. You need to do that at the right cost. And that's why you also need multiple demand gen channels, because now you can optimize for the customer acquisition cost of those. That's the CAC factor there under MQL. Then none of that matters unless those leads convert into customers, right? This is conversion percentage for the full funnel. So it includes the actual marketing conversion, like things like landing page conversion or ad click conversions, but it also includes the handoff of the leads to sales and the ability for your SDR or BDR team to convert those into prospects and opportunities, for those opportunities to be turned into wins. And as the marketing leader, you have a role to play in that full conversion journey, right? Even making sure that the sales team has the right materials, that they get the right playbook, that they have the right objection handling to close deals, the right demos. So that conversion percentage is one factor that you as a marketing leader need to think about. How do you help the company constantly optimize that? That's a very important part of T2D3 growth. Then the next one is what's called ARPU, average or annual revenue per unit. Unit could be user, could be customer, could be sensor, could be device, depends a little bit on your pricing model. But the point is that you need to start expanding the revenue. ARPU expansion, the ARR needs to become bigger per customer. So from every customer that you got from an MQL at the right customer acquisition cost that converts into a new customer, you want to get more revenue over time. This is a combination of product marketing, of managing discount levels, training the sales team to sell the right part of the value proposition, to do upsell, cross-sell with your account management or customer success team, right? All these things go into that one factor there, ARPU. So all these things on the above the line here are driving revenue, right? They're driving top line revenue, the amount of leads at the right cost so that you can get more of them, converting at the right pace into deals that get bigger and bigger and bigger. And then under the line, there's the other factor that almost trumps all of the others, right? Churn, right? If you get new customers at the right price and they buy a lot from you and keep buying more, none of that matters if you lose those customers, right? So churn and customer retention is critical for a SaaS business. And as a marketing leader, you also have a role to play there, right? How do you support the customer success function with the right materials? How do you turn some of the customer success function into automated nurture, into content, right? Things that will scale without having to add more people. So as a marketing leader, to drive T2D3 growth for a company, you need to look at all these different factors and basically have a plan for all. And your team will be challenged as you coming out of product market fit, where you really only had to do a couple of things really well, to now do all these things at the same time. Product marketing, demand gen, influencer management, PR maybe becomes a thing for your, depending on what market you're trying to enter. So this is T2D3 Growth. Thank you for joining.